Rates, how low can you go? As Public Enemy didn't quite say on Bring the Noise. One hopes Chuck D's royalties have not just been sitting in the bank these past few years, because US interest rates only seem to keep going lower. In the financial markets, the yield on the 10-year Treasury fell to under 1.34% this week. And the irony is that provides quite a juicy coupon compared with other sovereign bonds around the world. Increasingly, negative yields in Europe and Japan have emphasized the positive attractions of US Treasuries. But does this mean that global investors are going to keep on buying, pushing yields to 1.25%, as some traders think, or even down to 1%? Now, notwithstanding the Federal Reserve's nervousness about financial market contagion, the economic fallout from the Brexit vote is not likely to have much impact on the US. So that suggests that sliding Treasury yields signal something other than long-term economic weakness. The fact that the biggest declines have come during European and Asian trading hours is another clue as to where demand is coming from. The extra yield that the 10-year Treasury provides compared to German Bunds has been quite steady at an average of 155 basis points for the past 18 months. Investors need to consider, though, that the German yield may have fallen artificially low since Brexit because of concerns that the ECB is going to run out of Bunds to buy. A tweak to its quantitative easing rules could resolve that pressure. The ferocity of the rise in the Japanese yen against the dollar also appears to have been a technical factor recently. Rather than driving up Japanese yields in defiance of the Bank of Japan's monetary easing, arbitrageurs appear to be driving down US rates instead in response to the yen's rise. Now, these factors could very easily be swamped by a positive US jobs report, or if the Fed finally gets comfortable again with talking up the prospects for rate rises. Ultimately, the focus is going to return to US economic data. Bring the Noise may have been on the soundtrack to the movie Less Than Zero, but less than zero is not where US rates are headed anytime soon. Stephen Foley for the Financial Times.